Good morning. It is about 8:50 UTC on Thursday, the 26th of September, going through Bitcoin. And yeah, we're about a day away from the quarterly options unlocking for Q3, as Monday is the last day of Q3 before we start Q4. Overall, market still looks really strong. A bit of crazy, wild differences from gold going straight up to bonds and stocks pricing in like 100 basis points. It's a really wild thing, very untraditional based off of historical stuff. So the only thing that we know for certain is that volatility is the new normal. uh, that's at least the big expectation, especially given what we have coming in today and tomorrow. A big thing today on the menu, 1 hour before the New York Stock Exchange opens. Two big data points: GDP and initial jobless claims. Yeah, durable goods orders. And then obviously about an hour or 50 minutes into the open, Powell is going to speak. So I'm expecting a pretty big volatility move, potentially today. We could be seeing some tomorrow as well with the Friday PCE, but I think today, given the fact that it's the Q2 stuff, that's going to be such a big deal, plus initial jobless claims as well. Looking over at the long short ratios from Tuesday, Wednesday, and today. So the big thing is, obviously, as we were going down, we had that nice little short potential, which I'll go through from Tuesday. As we were going down, we then saw people trying to long this, obviously, into the lows, or into potentially new highs. And as price is now starting to move back to the upside, long short ratio is coming back down. Still, we are 50-50 or even more short than long. This is generally still considered bullish conditions, as retail tends to long more than short, and the fact that they're 50-50 means that there's a lot of position shorts that we can use as fuel for higher. A little bit lower time frame real quick. Yeah, like we said, is price is starting to move up, so people trying to short this back down a little bit early, but nothing really to change there. Funding rates are coming in generally positive, so positive or over zero is potentially influencing price to go down just based off of market makers and liquidity providers being incentivized to take shorts. BitMEX is neutral, which is good to see, but in general, Binance, Bybit on both the USDT and USD pairs are, reasonably strong. So again, not really giving us more of a push, but at the same time, the short order books locally have still been taken out. So overall, neutral, bullish, I guess, if you're looking at that with long short ratio. Liquidations, the one thing that sticks out is the fact that underneath about the lows we did earlier this morning, there's about 1K, so about from 62.6 to about 61.5. There's a couple bill of liquidations and longs that could easily happen just in the last couple of days. That being said, the higher time frame, like longer perspective of liquidity, still exists. The upside, we still have tons and tons of short liquidity, definitely enough to get us up to that magical 67.2 number. The longer we sit here without grabbing anything, especially since we have market inefficiencies below us, any breaks of these lows, I would expect that we come back down and retest stuff, get everyone really bearish. Just keep an eye out. What we don't want to do is start crabbing down and then start to do this kind of grindy downside price action, because all this does is trap longs. But for the time being, you're still potentially looking for that breakout. We're failing to break new lows, and it just means it allows all that older short liquidity and newer short liquidity to stack up, potentially getting us all the way up to test the lows there at 67.2, 67.5. So for that, it's looking pretty decent. Looking over at Trading Light, just to give some perspective, order books coming in, yeah, mostly stacked below us, which is good. So they're trying to hold stuff. It looks like it still wants to squeeze higher until we make new lows. It's a little wishy-washy, but again, we're making technical higher highs and higher lows on the 1 hour. The 4 hour looks a little bit but at the same time, for us to really close something nasty and start to lose stuff, 62.5, the majority of this liquidity, especially lower leverage, is still getting a pretty free ride in general. If we look over at the footprint, some of the bigger imbalances from Tuesday are still in place. So 61.5, pretty decent imbalance. If there's a local break at 62.5, 62.6, basically this low, since it's all tested, we would want to then target 61.5 and then potentially even 60.7, where there's a pretty decent one. I would expect that if we do have the breakdown, we kind of start to halt a little bit, get some kind of bounces, good places for taking profit before we potentially continue or then bounce back to the upside. In general, open interest is coming off as well. A lot of general volume is actually decreasing in this area. I'm expecting that to reverse today just because of all the economic events, and it's Thursday and it's the day before Q3 options unlock and everything. So I'm expecting a ramp up of volatility going into the weekend. And yeah, that's the big thing that we're really looking at for the overall orders themselves. It's a little lackluster, no big market smashing for the most part. There's quite a bit of shorts have been stacked over the last couple of days, so from Wednesday on. So if we do start squeezing to the upside, the big gains, obviously, that high at 64.4, this is a really big, important swing to grab above. Anything that gains 64.4 should squeeze us to the upside. Looking over at Trading View as well, general plan. So if you guys roll around and watch the Tuesday stream or the Tuesday video I put out, that played out really nicely. Had a little bit of a wick into the upside, closed back below the wicks. Potential short played out really nicely, came right back to the Q3. So overall, very happy with it. We had a hold, so we didn't actually get a breakdown of the Q3. So for right now, you're regaining weekly open, daily open, previous daily opens. So again, you're in this range that we talked about from the beginning of the week. Nothing crazy really to be said about it. Any loss of July Q3 that starts to be significant, 62.7, 62.5, basically this whole structure, you are looking for that kind of flush back down to 61.5 like we saw on liquidity, like we saw on trading light with the imbalanced order book or imbalanced order flow regarding those market orders. And yeah, and then the big thing comes into place at 61.5. Really, you want to see holds and weekly closes above 61.5. Watch out for that liquidity grab. There's still that potential short in place, but again, I'm eyeing more upside. So for the time being, I'm saying, yeah, if you're not already short as like a hedge off to potential longs, just watch that. You could easily get a squeeze up to 65.5. Any regain of 65.5, I'm probably targeting that magic 67.2, which is the higher time frame grab of liquidity. Where if we do that first, I am expecting that to be the local top, and then we actually have to like go sideways for a bit. Again, until we actually break down, this is actually just allowing local shorts to build before breaking down and going lower. You're playing the range until proven otherwise. The range is not big. It's about 2.5%, if that, going up to the August 3% maybe. So it's not great, but at the same time, if you are short from that August level, hold those in case you have some localized breakdown, and there's a potential for re-add on bearish retest of lower. Net long, just because the general trend is still to the upside, and that should be yeah, the expectation for continuation until we break something. So I think the big thing here is it's a little bit uninteresting. Alts have been a lot more fun to trade the last couple of days because we've seen a bit of reversal across the board, and we'll see what Powell has to say today as well. I think there's quite a bit of more cuts, more aggressive cuts. Like 50 basis points is an aggressive cut. I don't care what they said. That's like, oh shit, we were pumping the brakes too hard, and now we got to cut rates really fast to kind of like keep the stagflation in the economy from really slowing everything. So I would say that if that's the case, watch out for an hour before the New York opens, which should be 12:30 UTC. That's when all the data comes out, and Powell speaking at 50 minutes after that. So watch the levels, play the range if you want. I'm waiting for a clear break and some trending price action. Net long until proven otherwise. Hedging off with some shorts at the August open at 64.5. Until anything changes, enjoy the sideways, low volume, and trade some alts. Peace out.